Hey, welcome everybody. Thanks for showing up today and learning about the stimulus. Today's a big day because it's where they launched the 2020 pandemic unemployment assistance. We're going to get to that here in a little bit. A lot of you know me, some of you don't. I am an enrolled agent and investment advisor. I specialize in tax planning for real estate agents and real estate investors. Hopefully we got some good information for you today. We're going to talk about three areas: you as a taxpayer, as a small business owner, and then we're going to talk about taxes and financial insight. Resource-wise, we put together a website, 2020taxstimulus.com, made it a blog full of articles and videos to help you address all the different tax and financial challenges and opportunities posed by the pandemic and the stimulus bills. Let's talk about taxpayers for a minute. Oh, and I want to go backwards. If you have any questions, feel free to hit Alt-H and just pose the question throughout the workshop. My client care manager, Rachel Branham's on the call. She's going to help facilitate those calls and those questions, and we'll try to answer as we go along. Try to make this real interactive. Okay, so here we go. The biggest question for most people is, when am I going to get my money? When am I going to get my stimulus check? Very specifically, they started going out April 9th. It's $1,200 per person, $2,400 married, up to $75,000 single, $150 married, and that's your adjusted gross income. If you make more money than that, you'll still get something through about $100,000 single, about $200,000 married. But this is where a strategy is applicable. If you made a lot of money in 2018 and not as much money in 19, then we'll hurry up and we'll file your 2019 taxes. If on the other end you made a lot of money in 19, but you were under the filing limits in 18, we can still file your 2019 taxes individually as late as October, if you have a corporation as late as September, and the IRS will go based upon your last tax year filed. So just, you know, it pays to know how much money you made 18 versus 19, and most importantly, to keep you under the threshold to be able to get these recovery rebates. Speaking of which, the IRS has a website, and we put this through the 2020 tax stimulus website as well. Here, when you look up this blog article, we have an online tool, and I'm going to do a live demonstration here. The IRS has been feverishly adding people based upon your AGI. So if we just look at mine, for example, the IRS is saying that they need more information. I actually need to enter my bank account information so that they'll be able to give me the direct deposit. Now, why would they need this? Well, specifically, because as a self-employed person, you know, I'm not rely upon the tax refund. I'm just like you guys. We're going to owe a little bit, and so the IRS doesn't have my direct deposit information on file. Because they're accustomed to me paying. Well, a lot of you may be getting a different error message. I'm going to pull it up here. It basically says something to the point of information not found. Here it is. Payment status not available. Literally, my own account was that way until 2 days ago. And if you go to this website and you know, through the IRS, you go there and you see that, don't get upset, don't get worried. The bottom line is it's a new system, and they probably just haven't added your information, okay? If they have, and you've owed in the past, they're going to ask you for your bank information. When we click on here, they're going to ask for your adjusted gross income for either 18 or 19, and then whether you received a refund you owed. Just answer the questions. And if you answer them correctly, when you hit submit, they'll give you a confirmation there, okay? But really, I'm trying to stress the point. If you go payment status not available, just don't get too frustrated, okay? And again, the resource here is 2020taxstimulus.com. Go to the tax blog. It's the third article from the top online tool, okay? Greg Jackson asks, I have an S Corp. I also get a W-2 from my Corp. Can I still submit an app for PUA if I filled out an app for PPP? The short and easy answer is absolutely. A little bit longer answer is we're going to cover that in detail in the next section. So I'm going to come back around, but the quick answer, Greg, is yes, you can. Okay, so here we are. By the way, this 800 number, I don't even know if it was published. I received this directly from an IRS agent. This was late-breaking information as of last Wednesday, but 800-919-9835. If you go to the IRS website and you can't find any of your information or you need to update it, call that number and they may be able to help. But I think the best advice I can give you here is if they don't have your payment status, I think they're just processing data. Okay, this is a whole new website, a whole new process. I think we just got to be patient with it. Okay, housing, real estate agents, I'm sure you all are familiar with this. If you or your clients have an FHA, VA, USDA loan, you can get up to a year's worth of forbearance without proof of hardship. Be very, very careful with this, though. The worst thing that the lender could do would be to give you forbearance and at the end of the period require a full payment to reinstate the loan. Okay, make sure that they're going to amortize it before you take advantage of this. At the same time, for renters, there's a moratorium on evictions, and if you do have a multifamily unit, if you're getting forbearance help, you can evict or charge late fees to your tenants. Okay, we're going to talk about the Section 121 exclusion. Most of you are familiar with this as the 2 to 5 year personal residence. You can protect up to $500,000 married, $250,000 single. But let's talk about a seldom reference area called unforeseeable events. Okay, and what an unforeseeable event is: death of your spouse, divorce, twins, triplets, or if you're eligible for unemployment or unable to meet your basic living expenses. I really believe a lot of your clients are going to be in situations where they lose their job on account of this COVID-19 and then come to you and say, oh man, you know, I just bought my house last year. Do you think I can sell it? If I sell it, am I going to get hit with capital gains? Well, this exclusion really, really helps. Let's take a look. You sell a house March 31st of last year. Your client, unfortunately, April Fool's, gets he gets laid off or fired or let go. Okay, they've got a $100,000 gain. They've only been in the property 12 months of 24 months. So that's the math that you need to know for the exemption. 1 year of 2 years or 12 months of 24 months is 50%. That means even a single person, 50% of the $250,000 allowance, they can get a $125,000 exemption, which means with a $100,000 gain, your client can sell their house and not have any capital gains taxes due using the same Section 121 exclusion that they would use if they've been in the house for 2 years. Okay? So just be aware of that. Keep that in your toolbox. Your clients, if you're a resource for them, they'll be coming to you saying, hey, you know, I'm concerned. I might need to sell my house. Am I going to get hit in taxes? You can't give them tax advice, but you can let them know that there might be some hope out there for them. Similarly, with 1031 exchanges, normally there's a 45-day and 180-day deadline. If those deadlines fall between April 1st and July 15th, they're going to be automatically extended to July 15th, and that's through IRS Notice 2020-23. Unfortunately, there's no guidance if you had a client that was in a 1031 exchange and day 45 hit before April 1st, or if day 180 hits after July 15th. There's just no guidance there for any extensions. Okay. All right, so that's the end of the first section on taxpayers. Do we have any questions specifically as it relates to either stimulus checks or housing, being in your primary residence for less than 2 years, or 1031 exchanges? And again, remember, it's Alt-H to be able to chat. Okay? All right, going once, going twice, going 3 times. We're going to the next section here, small business owners. So in my experience, there's only going to be 2 or 3 different categories for you all out there. You're either going to be a real estate agent that's a 1099 independent contractor. You're going to have set up an S Corp or a C Corp and pay yourself salary, or you're going to be incorporated S Corp, C Corp, but you're not going to be paying yourself payroll. And do you see how I've got asterisks here? Well, most of the programs we're going to talk about are going to be based upon these first 3. But we're going to talk about pandemic defense here in a little bit to see if we can help you if you're incorporated and you don't have payroll, what do you do? All right, so the Keeping American Workers Paid and Employed Act has 2 different programs with the SBA, the Payroll Protection Program and the Emergency or Economic Injury Disaster Loan. The Payroll Protection Program, you apply through banks and lenders. You're going to have to prove, if you're incorporated, you're going to have to prove your payroll through 941 filings. If you are self-employed, through your Schedule C and your 1099s. And then once you receive the money, you've got to use it within 8 weeks of receipt. The Economic Injury Disaster Loan, initially it was so exciting because it was supposed to be a $10,000 advance. The SBA has made it now, it's $1,000 per employee. And I mean, it's okay, it's $1,000, but it's not as exciting as it was at 10 grand. Even the SBA wants you to take out the payroll protection loan as opposed to the EIDL loan. They even talk about it here in a press release, really pushing people to go to the payroll protection. So let's talk about that. The payroll protection loans are going to be 2.5 times your average salary, and completely forgivable if you use them, to pay for your payroll, rent, or utilities. This gold section is straight from the law that was passed, and it says an eligible recipient shall be eligible for forgiveness if they use it for payroll costs, utilities, rents, or interest on mortgages. Now, what it doesn't say here, and you've got to be aware, this is not automatically forgiven. These payroll protection loans are directly from banks and lenders. So you're going to have to apply for and prove that you use the funds appropriately. Now, if you're paying yourself salary in your corporation, that'll be pretty easy. You just have to run a couple of payroll reports. But just keep that in mind. The payroll protection loan is forgivable, but you got to prove it. Okay. In fact, it was interesting. On April 16th, Chase posted this message saying that, you know what, we're out of money. And then on the 22nd, they said, well, good news, we're back in business. If you're already in the queue, we're going to process it, but they might not take new applications. So let's talk about that specifically. Chase, Wells Fargo, Bank of America, the big banks continue to process loans, but you can also get a payroll protection loan through a lender like Cabbage. And either way, Chase says, you needed to be a bank customer on or before February 15th. They're going to talk about all the different things you need, and Cabbage is going to be very similar. Okay, for those of you that are not incorporated, a 1040C is very specifically the Schedule C of your 1040. That's your profit and loss on your tax return. Thomas, I see that you're trying to ask a question here. but I don't think the rest of it went through. If you want to retype that, we're happy to answer it. If you have a corporation and you are the lone employee, the 941 is the quarterly tax return, and the W-3 is produced by your payroll company. It kind of looks like a W-2. It just says the total number of people that received wages. Back to the EIDL loan, let's see real quick. Oh, so Greg Jackson asked another good question. I said very specifically that Chase, as of April 22nd, said they're not taking new applications. I know for a fact that Wells Fargo, as of 2 nights ago, is still receiving new apps. So let's, using the very, very correct words, on Monday, when funding became available again, Chase was just working their queue, and they weren't taking additional applications. I know for a fact Monday night, I helped 2 clients. I think technology is amazing. We just did a screen share, and I helped them do Wells Fargo applications and submittals. So you really got to check with your bank. I think that the important part to know here is that there are both banks and lenders. And for example, Capital One, if you've got a Capital One credit card, they're sending out notices saying that we may be able to help. If you have QuickBooks Online, QuickBooks Payroll, they're offering to help. And when I say help, I mean to say that they're acting in the capacity of a lender, trying to facilitate loans that are, federally insured. Roxanne, you've got your hand raised. Although you might have a host that doesn't know how to pick on you here. Maybe, can we unmute her? Let's see. Roxanne is trying to Roxanne's trying to ask a question. Maybe best is just to type it out there, and we'll come back.
I unmuted Roxanne.
Oh, good job, Rachel. Hey, what's going on, Roxanne?
I don't know what it's doing here. It's coming back in on me.
You're on.
You're in. You're good.
Internet problems.
This is the tax help. This is the tax stimulus hotline. We've got our caller Roxanne on the line. No. Roxanne, do you have any questions regarding the different loans?
Well, on that 1099 miscellaneous for the even on cabbage.com, are they going by line 31, or are they going by your average for 12 months? Because mine came back.
They absolutely are. So here, you bring up a great question. So let's really super fast understand what's going on. Okay. Let's say that you, as a real estate agent, make $100,000 in total commissions. Okay, that's going to be on your 1099. Okay, and let's say you go through here and all of your expenses adding up are $40,000. Then line 31 is going to be 60, and I know that I'm skipping business use of your home and everything else. I just want you to see that total earnings versus net profit, they're going to go on net profit, but they're going to ask for 2 things. They're going to ask for the Schedule C and your 1099s. Okay. Okay. Does that make sense, Roxanne?
Yes, it does. But so when they come back though with a different amount, how are they determining those amounts?
Okay, so that's great question. So check this out. This is what they're going to do, and this actually, I'm going to go backwards in time here a second. When we look at the payroll protection loan, the key to it's right here, 2.5 times your average income. So they're going to take the $60,000 net income divided by 12 is 5,000 times 2.5, and that's the amount of your payroll protection loan.
Okay, thank you.
All right, sure. Steve asks, we had high income in 18, our CPA has not completed our 2019 taxes. How long will we be able to file for the tax stimulus, and can we control that our 2018 adjusted is not used? Boy, that's a good one, Steve. All right, so let's see if, and by the way, Britta, you're absolutely right. It's 2.5 times line 31. Well, let me back up. It's not. It's line 31 divided by 12 times 2.5. It's based upon your average monthly, not annual. So line 31 of your Schedule C is your annual profit. You got to divide that by 12 and then multiply that times 2.5. You guys didn't know you signed up to have to do math here in real estate. All right, so all right, Steve, high income 2018, 2019. Yep, Britta, you're all over it. That's exactly the formula. It's line 31 divided by 12 times 2.5. Yep, that's right. Okay, so if you have high income in 2018, and so we're going to say married filing jointly over 200,000. Okay, and I know the real number is like 197 or 198, but let's just go with that. Okay, how long will we be able to file our tax stimulus, and can we control? So the answer, actually the answer to this question is not as hard as it seems. So I'm going to jump way ahead in my presentation, and I'm going to go to a slide almost towards the end. Okay, this is my pandemic defense slide, but it's going to answer Steve's question. There are 4 things that we have. We've got stimulus checks, EIDL loans, payroll protection, and pandemic unemployment, which just started today. Okay, in Steve's situation, I would be looking at right now these bottom 3 because you want to have income for your business. Regarding the stimulus checks, though, which is this question, the way we do that's like this. If you're over the threshold, and again, please bear with me, these are not guesstimates, but fast math estimates, right? So our actual numbers are a little bit lower than that, but say 98,197, 75,000 single, 150 married gives you all the money, and then it phases down. But if you're over the thresholds, what happens? You're just not going to get anything, which actually might be a blessing. Because if 2018 is too much, but in 2019 you're going to fall, and this is adjusted gross income, right? And what's adjusted gross income? Adjusted gross income is, and we're going to use a 2017 Form 1040 because it's easy to read. At least it's easy to read to me. Is all of your wages, all of your business income, all of your rental and S-corp profits, minus your self-employed health insurance and SEP and IRA and 401k contributions. That's your adjusted gross income. So from a tax planning standpoint, if you're right on the cusp of getting money, we may be able to get you down under the thresholds to get you that $1,200 or $2,400 stimulus check. And keep in mind, if you file your tax return in July, in about 3 weeks after that, you should get your stimulus direct deposited, given the fact that you're in these brackets. So Steve, that was a really good question. I hope it was a okay answer, but that's where we're at. All right, so let's push through some of this stuff real fast. EIDL. I have not checked this since last week because they stopped taking applications, but the COVID-19 website, okay, you see that? They are not. They're going to offer this on a first-come, first-served basis, but they are not currently offering additional EIDL loans. I'm not saying that the money's not going to be there. It was supposed to be. It was supposed to be there, but it's currently not available, okay? Thomas asks, regarding 1031s, how long is the 45-day and 180-day periods extended if the exchange falls between April 1st and July 15th? July 15th. The answer is July 15th. If the 45-day identification period ends between April 1st and July 15th, you can now identify the property, the replacement properties, through July 15th. Conversely, if the close, the 180-day close, falls between April 1st and July 15th, you can now close as late as July 15th. But those are the only, that's really all the help you're getting on the 1031 exchange front. Okay, so not to beat a dead horse, but according to Congress, according to the law, these EIDL loan emergency disaster were supposed to fund within 72 hours. That's a joke. It's been over 3 weeks for most people. But if you did receive them, know this, that if you receive an EIDL loan and a payroll protection loan, any money that you receive in payroll protection, there will be an offset on forgivability if you get both. But it's an easy workaround. Here's what I mean. Let's say you get $1,000 on EIDL and you get $10,000 on the payroll protection. Use the $10,000 for payroll and use the $1,000 here for rent. That's it. So long as it's not used for payroll, you can kind of double dip that way, but like I said, you can't even get it right now. All right, here's the big deal. This is brand new, late breaking information today. Go ahead, Rachel.
Jesse, we have a chat question from Abra Ryder for the PPP.
Oh, Abra, yeah, it's been a long time. How you been? All right, for the PPP, how do independent contractors pay themselves, improve the use? Boy, that's a real fun one. I think, personally, if I'm not incorporated and I apply for the money and I get it, I'm going to try so much as I am able first to pay for the things that are identified in the law. What does the law say? The law says, and we're reading it here, rent payments, mortgage payments. Most of us aren't going to have SBA-backed mortgages, but office rent's easy. Repaying obligations that can't be met due to lost revenues. It's my understanding that paying yourself is basically just net income, right? So I think there's going to be a true up on this for independent contractors through your Schedule C and your taxes next year. But unfortunately, there hasn't been any guidance on pure independent contractors on how to make sure you're making the best use of that money within those 8 weeks. My guidance is use it for things that are easy to track. You got to pay your rent, you're paying your rent. You've got to pay your utilities and your subscriptions and all of these things. For example, you could pay your NSDCAR membership fees. That was good. No? All right. Anyway, all right, Karen, if I'm an S Corp, I have 2 employees, myself and my husband. I applied and receiving UI. Can I apply for PPP to pay my husband's salary? Kinda. So, Karen, I'm actually I'm going to answer your question, but I'm going to do it here in just a minute because it's in one of my slides. So I'm going to come back to that. All right, PUA. If you Google EDD PUA, for pandemic unemployment, it's going to be very helpful. The Labor Department of California also has, let's see, also has a link that I'm trying unsuccessfully to bring up. I know that the EDD literally crashed today. They literally crashed, okay? And how do you know, Jesse? Because at 9 o'clock this morning, I was talking with a client, and we were literally trying to apply for this pandemic unemployment. It's day 1 of the program. Okay, so here's what I know for sure. In order for you to apply for it, you have to go and register for an online account, which is right here. Look at how hard that is. Who designed this? EDD PUA, okay? You got facts, and you've got the actual application. You have to click on a UI online and then apply for it, okay? That's exactly how it works. Now, phase-wise, everybody's going to get $167 a week. They're immediately going to start pushing that out, plus $600 a week from the 29th of March through July 25th. And then they're going to be trying to do retros. And literally, what does that mean? Well, let's say, for example, the start date of your claim should have been March 1st. Oh, okay, just kidding. Okay. Maybe the 26th. All right, if you've got a corporation, let's say you're paying yourself $2,000 a month. Okay, that's going to be $231 a month, or excuse me, $231 a week plus $600. One of the things we may end up having to do is filing just Q4 income. It actually bumps up your weekly, but that's the next thing we need to talk about. Okay, guys, I'm small business owner to small business owner. I believe that activity begets opportunity. And what I mean by that is the more phone calls you make, the more WebExes you have, the more online marketing activities you have to prospect and market and partner for success, the more successful you're going to be. I also understand that most of us have 90 to 120-day sales cycles. What you did in January is paying you right now. There's a temptation in April and May at home, being at home, not really working, not really being effective, that a lot of us might be hurt come July. And so my advice to you is this: let's hope for the best, let's hope we get back to work, and let's hope that we find clients that need our services, but let's also plan for the worst, and that's our pandemic defense. It's evaluating your 18 and 19 personal returns to get that $1,200 per person stimulus check. Hopefully you've already applied for an EIDL loan, and then the payroll protection. Now, going back to Karen's question, she's got an S Corp, and which is great. She applied for unemployment, and now wants to know, can I take advantage of payroll protection? Unfortunately, I think there's two negatives that are impacting Karen right now, and that is very specifically the idea of if she did. Here, let's read it right from the facts. That you've already submitted a unemployment claim. Okay, what should I do if I already filed a claim for regular unemployment? Okay, well, here we go. If I'm already receiving regular unemployment, can I choose to switch over to PUAs if I want to identify myself as an independent contractor or self-employed? If you're already on unemployment, you can't switch over, but I think that, let's see, I think that it will offset to the pandemic unemployment with the extra $600, okay? And so, like in Karen's situation, she wants to, oh, I'm sorry, I misunderstood her question. Okay, so she's got an S-corp, she's paying herself and her husband's salaries. She applied for unemployment for herself, but hasn't applied for unemployment for him. So the details of the payroll protection loan are this. It's 2.5 times your salaries from last year. And the money that you receive has to be paid out in wages within 8 weeks of delivery, and you got to keep your payroll at least 75 cents. I think Karen might be in a situation where she can apply for it based upon last year's earnings and then use it to pay her husband's salary. Now, the nice thing is she has the professional flexibility of how much and when she pays her husband the salary. Does that make sense? So I think in Karen's situation with a little bit of planning, yes, it can work. I'm going to say this, though. It would be better from a step-by-step standpoint. 1, you get your stimulus check. 2, you get the EIDL. 3, you apply for and receive the payroll protection loan. And then lastly, you go on pandemic unemployment. Now, speaking of which, this is going to sound crazy, but it's the God honest truth. I believe that the FTB California, the EDD California, and the IRS care more about whether or not you file a return than if you pay the taxes. And I know that sounds crazy, but what I mean by that is if you were incorporated last year and you haven't paid yourself wages, you're going to find that it's remarkably difficult to get any benefits because everything's going based upon wages. Your payroll protection, what's it based on? Wages. Unemployment, it's on wages. So going back to our pandemic defense, if you're still, you're still out there, you're still trying to work your business and you didn't file your wage reports from last year, maybe you file them now. And you use those reports to apply for an SBA loan. You don't have to have 4 quarters of payroll to get a payroll protection loan. You literally need to have a 940, which is an annual report, and or a W-2 or a W-3. On the same note, qualifying for unemployment, the EDD requires all payroll reports to be filed online. You could literally create an EDD account as a business owner today and go back and file Q1 reports, the DE9, the DE9C. That would help you qualify for unemployment. Thomas Hinkle asks a question very similar. Let's see. Okay, let me go back up actually a little bit. Let's talk to Sharon. All right, I applied for unemployment 3 weeks ago, self-employed, and received a case number, not knowing that there would be a separate PUA. Should I reapply or move it over to the PUA automatically? All right, I think you have to do something. What should I do? Because a lot of people were denied immediately when they applied for regular unemployment. Okay, if you filed for UI and received an award notice showing 0 in benefits, it could be for one of many different things. Unfortunately, I think you're going to have to contact EDD to do that. Here we go. If you're a self-employed independent contractor and you otherwise qualify for PUA and already filed, please read this, okay? And I'm sure the instructions, it's going to be somewhat of a hard deal. You're going to have to go through your online account. You may need to contact EDD. So I think that's why Carr was saying earlier this week to not apply for regular unemployment. Okay, my payroll for 2019 was done quarterly. That's good. Revenue and business dropped off as soon as COVID hit. Okay. Can I go back to 215 and apply for PUA even though my payroll was done through? I think, Thomas, you can do that. Absolutely. Because, and actually, let me tap dance. I think in Thomas's situation where he's paying himself quarterly, I think I go back to the pandemic defense playbook here. Apply for payroll protection. Get that additional money which you can use to continue to pay yourself. Run a one-time or two-time payroll, and then turn around and apply for PUA. Because really, PUA, just so you guys know, it's really designed for truly self-employed people that wouldn't otherwise be able to get it. By paying yourself W-2 salaries, I think you're in the regular unemployment queue. And I think that $600 is going to carry over regardless. Okay. Here's an example, by the way. If you're paying yourself $3,000 a month last year, you'd get $7,500 in the payroll protection, and then you would get $450 a week through December with an extra $600 a week. Keep in mind that if you paid yourself, or rather you filed $36,000 in salaries for all of 2019, but you did it late, you're looking at about $5,500 in Social Security and Medicare taxes, plus late fees, plus any state fees. But you balance that out. You know, most of you incorporated specifically to take more control of your Social Security and Medicare taxes. And you just got to balance. You know, you got to stay in the game. You got to have income coming in. You got to do what you got to do. Well, Debbie asks, can you get a PPP if you don't have a business checking account? It may be more difficult, but it depends on where you go and depends on how you're set up. So, for example, if you're a corporation and you don't have a business checking account, I'm 50-50 on that one. If you're self-employed, it really doesn't make self-employed, you know, unincorporated. But that's going to go to the source. Chase wants that business relationship as of February. If you go to an online lender, whether it's Cabbage or like Capital One or something, it's really up to them. That's not a federal requirement. Although from a pure cash flow standpoint, it would be good to have a business checking account. Okay, so are there any other questions so far on the small business aspects and the various programs, whether it's stimulus checks or EIDL loans, payroll protection, or pandemic unemployment? No? Okay. All right, guys, we've got 15 more minutes, and the next section is nothing but brain damage, but I'll go fast, and I'll try to help you out. Oh, Greg's got a question. Are you going to address I have an S Corp, I also get a W-2, can I submit an app for PO if I filed an app for PPP? Oh, absolutely. Sorry, Greg, I thought I addressed that. Okay, so in Greg's situation, step by step, you filed for the payroll protection loan. Now, hopefully you get that loan in the next week or two. If that's the case, then I would immediately use that to run another payroll so that 100% of those payroll proceeds were paid to cover my wages. Remember, a part of the forgiveness on that is your payroll has to stay at 75%. Now, if you're a one-person operation and corporation, what is 75%? Well, 75% of your average wages. So you can literally receive that fund, turn around, run a payroll for the whole amount, and it's forgivable. And the next week or the next day, even turn around and apply for PUA. Going in reverse, I don't know if that's a great idea. And the reason I say that is if you're on unemployment, you've got if you then receive the payroll protection loan, it's going to be very difficult for you to turn around and use it for payroll, so that's forgivable. And Pam, yes, we'll post the slides. We'll post the slides after this. Okay, what is the income limit for applicants to be eligible for PUA? You know, James, there is no particular income limit. It's not that I'm aware of. You can literally go to the EDD unemployment calculator. I mean, even if let's go crazy, let's go big. Let's say that you're making 20 grand a month. Okay, this is different than the stimulus package. Okay, it's going to cap you out at the weekly rate of $450. That's the maximum that you can receive, but $450 plus $600. So this is different than the stimulus information where it was based upon you know, about 100 and 200,000 single or married. Okay, guys, let's push through the next section. Like I said, a little bit of brain damage, but it's important. All right, if you are in a bind financially, you can now take out up to $100,000 from your IRA without the 10% penalty and have 3 years to repay it or spread those taxes over time. And Debbie Dolan says, so it doesn't matter how much money you made this year prior to March 27th. Well, and again, we need to use the very specific words. If in tax year 2020, if we're trying to use the last 12 months of earnings for our payroll protection, more is better. But if we're going to apply for the pandemic unemployment, best of my knowledge, now it doesn't matter how much money you made so far. It just matters very specifically two things. It matters, A, that your business has been interrupted because of COVID-19, and I think that's a pretty easy statement given the fact that offices are closed and you're unable to have open houses. And then two, if you're applying for pandemic unemployment, one of the questions they're going to ask, it's the very last page, is do you or are you an officer of a corporation? Why do you think they're asking that? I think they're asking that specifically because if you've got a company, you should be paying yourself wages, which would be regular unemployment, which goes back to our pandemic defense and you know, whether or not you filed the forms, you might need to do so. All right, so back to taxes and financial insight. You've got IRA funds that are available. 401k funds are similar, although that's up to a $100,000 loan. If you have an old 401k somewhere, I recommend you roll it into an existing IRA so that it's just clean and easy. Also, phases of retirement. Most of you on this call are either 20 to 50 or 50 to 70, and the rules of money are different. And we're going to go through this really fast, but if you're 20 to 50, you're trying to grow your wealth. You're worried about your stock and bond mix, and your best strategy is dollar cost averaging. A quick survey here, guys, is this. What's better, an up market in the stock market or an up and down market? Okay? I want you to ponder that. You don't actually have to answer it, but think of this. In a up market, if you're investing $100 a month, $100 invested at $10 a share gives you 10 shares. $100 invested at $20 a share gives you 5 shares. Okay? So whereas an up market would be going up, you buy less shares which means your total value will be less than when you're buying on sale, coming up, buying on sale and coming up. We are literally right now in a W market. It crashed and it recovered. And you know what, guys? If people aren't back to work and making sales and doing what they got to do, I can guarantee you the market's going to crash again this summer. Now, if we all get back to work and we're making money and the economy's rolling, well, maybe it's a V market. But real estate's a big driver of the economy, from mortgage loans to contractors to everything else. We got to make sure you guys get back to work here. All right. If you're 50 to 70, dollar cost average is not your best friend, because if the market crashes and you lose half of your value that you've already earned, it might take 5 years to break even. So you need different strategies. You need to worry about principal protection and, more specifically, income allocation. And all that is simply identifying the money you're going to use to guarantee an income base in retirement so that the rest of your money is there to grow. One strategy is to use a guaranteed minimum withdrawal benefit income rider. These are available through IRA annuities. Real simple. You've got 200 grand. You put 120 against your income, 80 for growth long term. In 10 years, that 120 will pay out $1,000 a month the rest of your life, which is about a 10% payout of what you had. Yes, you're going to spend down your money over time, but you'll never run out of income. And let's face it, at the end of the day, we all live on income. And you build an income base through Social Security and pension if you have it, and using those income annuities and rentals. And it's actually very possible to build a $3,000 to $4,000 a month base if you're protecting your principal. Hey guys, do you know that you have to have insurance now? Obamacare's mandate was repealed by the IRS, but according to the FTB, it's back. And effective January 20th, you either have to have health insurance, get an exemption for not having it, or pay a penalty. Their website goes on to talk about sample penalties, but do not believe these penalties. What do you mean, Gus? What I mean to say is those samples are ridiculous. They don't look that scary, but if you actually pull up their calculator, they're ridiculous. If you're single, and let's say you're in your 40s doing great things, and you're making $150 a year, if you don't have coverage all year, that's $3,300 in penalties. And if you're married, it's really not, it's still brutal. So I want you just to be aware that all the things going on, it might be a good idea to get health insurance, and that's $2,800 for that married couple. So just be aware of that. Good news is there's a special enrollment going on. Since it's after April 16th, you'll have coverage effective June 1st. Last bit here, a lot of people are talking about life insurance right now because they got more time at home and they're worried about protecting their family, God forbid. I've seen a lot of carriers do examination-free underwriting up to age 50 and $1 million, doing electronic apps and signatures, but then negatively also postponing decisions on clients that are 60 or 70 years old. And postponing means they're not saying yes or no, but they are just not giving a decision. I'm going to share with you a strategy that I used for myself to save over 30% on the cost of insurance, and it's based upon just a belief system. If you have a stay-at-home spouse or any spouse that's dependent upon your income, it may be better to give them monthly income instead of lump sum benefits, because you can't get in trouble with monthly income. You get $1 million, $2 million, $3 million lump sum. That's a huge temptation for a lot of people. So in my situation, God forbid I pass away, my wife will receive 10 grand a month. And because of that, I'm receiving actually a 40% discount. Check it out. Here's a female that's 41. 10 grand a month, 30 years is $3.6 million. But they're paying premiums based upon $2.4 million. So what that means is 2.4 divided by 3.6, that's a 32% discount, right? Because you're paying premiums on 2.4 instead of 3.6. My personal belief system is insurance is just a tool. It's a tool for, God forbid, you pass away before your time, you provide income for your family, and whether it's 50, 100, 150 bucks a month, you can design, or we can help you design a plan to help get you through. All right, so Greg asked if we have questions about the seminar, how can we reach you? That is a great question. All right, 2020taxstimulus.com, really easy to get in touch with us, name, email, info. Also, Rachel, my client care manager, she'll make sure she gets you on the calendar. As a recap of this workshop, we talked about the stimulus checks, we talked about housing. By the way, all of us as professionals should be resources for our clients. Similarly, if you're trying to make a sale, if you've got a client that's concerned about some of the tax issues related to the sale of their home, don't hesitate to reach out to us. We'll do the best we can to answer the questions. Also, with these PPP loans and pandemic unemployment, if we can help you, we are willing to help you. Also, with all financial and tax insight. Resources, 2020taxstimulus.com. We're going to post a recording of this workshop there, as well as the PowerPoint slides in a PDF format. There's other recordings we did, and it's interesting. You'll actually be able to see how this workshop, this webinar has kind of morphed over the last month as information has changed. Again, the 2020taxstimulus.com website, hey, we're just ready to help you guys. Lastly, want to thank the North San Diego County Association of Realtors for hosting this workshop. And Rachel, great job. Yep, clientcare@roadmaptax.com. Are there any other questions out there regarding the various programs or stimulus? Okay, guys, we've recorded this workshop. We'll have it posted as soon as it processes. You guys make sure you stay safe out there, and let's get through this and get back to work. Yeah. All right. You guys take care.